The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 31st terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hey, what better day is there to do it than today? That's right. Do not be a prisoner of your past. Hey, a new year is about to begin out there. Hope you're having a great day, depending on when you're listening to this, no matter what. Hope you're having a great day, great weekend, great football that's on. In fact, for maybe the couple people that are tuned into the show that aren't watching the FSU Houston game, I want to thank you for doing that. Now, hey, let's not forget this, that we want to have an extraordinary day. We want to have an extraordinary weekend. We want to have an extraordinary life, and the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the markets. We get to go see what the bulls and the bears, the buyers and the sellers, are communicating to you and I just past 1 o'clock in the afternoon on this terrific Thursday. I'm absolutely grateful for your presence. I'm here to serve you, so feel free. Pick up that phone. Dial on in 877-927-6648 internationally. 727-445-1044. Of course, you can send me an email, steve@tfnn.com, and inside the Tiger's Den, feel free to go ahead and ping away. I'll do the best I can to take a look, put a set of eyes on what it is you're looking at. We'll look at both sides of the trade out there. We've got to do that. But let's go ahead and get things kicked off on this New Year's Eve edition of the Trader's Edge Show. Of course, this is Terrific Thursday. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 75 points. She's trading at 17,527. S&P is off about 8, trading at 2055. NASDAQ Composite off 26, trading out at 5039. Russell 2000 is off 5 points, trading at 1143. Gold is up $2 at 1062. Silver's up 3 pennies at 1387. Light sweet crude up 81 cents at 3741. Lead the old charge to the upside out here. Oh, no, it's not leading the charge. I'll have to reset this. I'll have to reset my system during the break. I'm not going to do it right now. My winners and losers, my point gainers and point losers out here, that's clearly off. In any event, we'll come back to that. We won't worry about that at this stage. What you want to know is, hey, what are the markets? Now, I've got a couple questions that did come in after the show yesterday. One was asking me about, because I make reference to the volume in the ETFs, specifically the index ETFs, and how little they really provide us with information out there. And so I had questions about, hey, if you're not using that, or why aren't you using that, and what is it that you do use from a volume matrix standpoint? So we'll take a look at that during the day today, as well as anything else that you'd like. But first, let's go check out the market, see what we're doing out here. Let's start in by seeing where we're at with regard to our advanced decline oscillators out here inside the New York Stock Exchange. We'll go ahead and blow this. Now, this panel here, those of you who've tuned in so many times before, you know, this is one of my favorite panels to take a look at to get an idea for what the market is communicating to you and I. Left-hand panel is New York Stock Exchange. Panel to the right of that is NASDAQ Composite. Then we've got the Dow, and then we've got the S&P 500 and the VIX Index. Great way to immediately get a snapshot of what's going on. Now, what's interesting here, as we take a look at these panels, we've got divergence that is going on. And the divergence that I mean is that the New York Stock Exchange, as we speak right now, still in the hands of the bulls. So the wider swath of the marketplace is still in the hands of the bulls. Now, this is like a Stevie football game out here that we're playing or that we're interpreting when we take a look at signs and signals inside the market here. NASDAQ Composite actually, well, as we speak right now, it is slightly in the hands of the bears out here. Dow, it's definitely in the hands of the bears. Now, this is daily, daily signals that we're looking at. Inside the S&P 500, I'd have to say that's also in the hands of the bears out here. I would use that by making the determination that price with regard to the VIX index is trading above its 50-day exponential moving average. That is at the very bottom right-hand panel of my screen. That is priced out right now. The VIX I'm referring to is priced at, where are you? It's priced at 1821. And the actual 50-day number is 1769. So we're pretty well above that. Let's go see if we've got a reading today of greater than 10%. No, it's only about a 5% move to the upside out here. So, but the wider swath, that's really the interesting thing. That's the New York Stock Exchange. It's still in the hands of the bulls. Now, what did it need today for net declining issues? Let me see here. In order for the bears to actually take control of it, the number is 1317, the exact number. If we go take a look and see where we're at, net declining issues, go get a feel for what's going on market breadth-wise, we've got net declining issues 234. So, the market's going to have to get some real giddy up and go out here. We've got divergence. Really, you would think it would be just the opposite, right? The wider swath of the market would be giving you the message that based on what we saw, the Dow was up 100 points or so, 150. I don't remember what the exact number was, but was trading lower, much lower than where we're at right now. And even then, inside the New York Stock Exchange, when I took a peek at it, it still was in the hands of the bulls out here. All that really, I really do have to start this because I don't even have control of my cursor out here. That's a real bummer. Gosh, darn it. Okay, well, you know what? We always, things happen for us, not to us. So we're not going to go ahead and use this page out here. I'll try another page. Well, I can do it when it's smaller. The New York Stock Exchange, let me see if it actually just came back to test the top of the gap. Now, the top of the gap, I'm using December 22nd as the number 10132 and change. And the low so far this morning, today, 10145. So it hasn't actually even got down to close that gap, and it's really trading above the bottom portion of the gap, which was December 28th out there. So, and actually the NASDAQ composite right now just turned over. Looks like the bulls picked up the ball out here. So, and I will say that the NASDAQ composite and the New York Stock Exchange, those two combined are going to give us a better read on what the market is doing out there. So that's on the daily chart. That's what's going on there. If we take a look at what was going on intraday here, as the market was pushing lower, this is the ES Mini. I've got probably about a 2 or 3 minute delay here, so it's not really trading at 2045, but close enough for our numbers for what it is that we're looking at. So we've got this nice little price relative strength divergent top that formed out here. This is back at about 8:30 in the evening. This was on December the 29th. Really got your signals here, right here at about 12:30. In the morning back on December 30th. So we get that signal. Price goes ahead, moves lower. It is only in wave 6 to the downside. We can see as price was moving lower here at 8 o'clock this morning, at 8:30, at 9. Price was moving lower with less relative weakness, but no reversal signals. Just really got to understand how to use this system out here. Otherwise, you could do the right thing at the wrong time and get run over like a freight train. I do not want you to do that out there. If you want to learn the system, come on over, subscribe to my newsletter service. There's a video, or come on over to TFNN, give them a call. You're already at TFNN. Give them a call. You can go do one of my workshops that's taped and then have some interaction with me as well to answer whatever question you've got out there. But, don't use a system. Don't assume that you have learned everything, because there's always nuances to the system that are the make it or break it aspects of what it is that we use for trading out here. Now, we've only gotten down to a 6 leg, and it looks like a little doji candle. It was also a hammer candle at the same time. And this was at 11 o'clock this morning. Some follow through out here with nice little bullish engulfing. Was this just a simple counter trend rally, or is it something more than that? It's all going to depend upon how the end of the day closes, and I don't know how the end of the day is going to close. I can tell you at 1:15, we looked at the wider swath of the market, and it's not exactly falling apart out here. So, so that would say to me, that this is more than just a little bit of a counter trend rally. But I need more information, quite frankly. If I had a price relative strength divergent pattern and we were in wave 6, I would say, yeah, we've got it. But that would be because we'd have the slingshot that would be in place. And we don't have the slingshot in place. Even if we take a look at the NQ, see where it is at. Remember, it made wave 7 to the upside, only wave 6 so far to the downside. It's more than a counter trend rally if, in fact, price is able to stay above 4608, and I would say probably above 4608 for 1, 2, 3, 4 at 2 more hours. So we'll say just simply the rest of the day out there. Otherwise, if you get below that, what you would anticipate is at least a move down to that 7th wave. In fact, what could happen here, you could actually, I could see the market doing that, moving down and then creating both a 7th wave to the downside as well as a price relative strength divergent pattern out there. So that's a possible setup that is in place out here as we take a look at the 30-minute charts. If I look at the Dow as well, go see, again, no real confirming patterns out here. Inside of the Dow, the type that we really like to see that tells you've got a very tradable top or a very tradable bottom out there. It's just not in place. The only place where it actually could be coming from would be the Russell 2000, which arguably is the weaker of the indices out here. I do have this in a 7th wave move to the downside that took place at 11 o'clock. It was actually confirmed at 11:30 out here, and then a nice big ranging bar from 12 to 12:30. So the weak link out here is saying, hey, not so fast. So that's what's going on the daily charts. That's what's going on the intraday charts out here. Let's take a look at a couple of other things. Then we're about a minute away from the break, so I won't go into answering the volume questions. We'll pick that up at the beginning of the next segment out here. But let's take a look at what's going on with some equities. Let's take a look at what's going on inside the gold market. So we're flat inside of gold. But let's take a look at a couple equities. Let's look at Rand Gold out here. One of the stronger looking stock charts. And, what is it doing? Just really trading sideways. Let's go ahead and put some market profiles up on the screen here. See what we've got. Let's look at daily and weekly. And at this stage here, Rand Gold Resources, GOLD is the ticker symbol. Just been kind of consolidating after a little bit of a move up on December 23rd. There we had volume of about 1 million shares. Yesterday you were pulling back with 300,000. That's the way you like to come into levels where things broke up to the upside out here. And in the case of Rand Gold, it is trading above its daily market profile high, 61.30. So it is possible that that old resistance has now become new support, and this stock looks pretty darn good. The only way that this could look better is if we get its price oscillator here at the bottom, WEUI, above the zero line. Above the zero line and rising, and that says that price moves back to the highs of December 4th. Most likely it takes that out, and it moves all the way back up to a price point of about 72.07, currently trading at 61.73. Dow's off 78, S&P is down 777. That sounds like the one-armed bandit. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 74. S&P is down $7, and putting some real pressure inside the markets out here. The currency pair, your favorite currency pair in mine, that is the Euro Japanese yen. What we can see is that it has finally drifted all the way back to where it had broken out. That was on not Ben Bernanke Day, but that was Janet Yellen Day. That was December the 3rd, I believe. And we can see, huge wide-ranging bar. This currency pair has moved lower. It's moved right back into the breakout area. It certainly needs to, if it's not going to do it today, I doubt it's going to do it today, but it could easily trade back into the November 27th level, 129.67 to 130. If it closes below that, that spells really bad news. Should spell adds real selling pressure into the stock market out here. So there's no divergence here. There's a lot of headwind for the bulls to try to move these markets higher on this last trading session of the year. Now I've got let's get to a couple of the questions. One that just came in here from John in Sarasota. He wanted me to go ahead and take a look at UGAZ. That I believe is the triple ETF for natural gas. So let's look at it this way. You can see the, give me a moment here, there we go. So this chart here takes a look at both the current contract for natural gas and UGAZ. I don't know why I'm not getting the market profiles up for UGAZ, but I'll switch over to a different page and maybe we'll get it that way. Oh, maybe I do know the reason why. Give me one moment here. Let me see what I've got turned on. No, it should be working. It's not. So not a big deal there. But what you want to do in trading any of these ETFs, enter these ETFs, is really make sure that you are focused on what's going on inside of the contract out here. With regard to natural gas, nice explosive percentage move off of the bottom from December 18th out here. Pulled back just slightly yesterday. We take a look at what that pullback has been retracement-wise. Let's just do a retracement from the low of December 18th to the high out here on December 29th. And really, as far as a pullback is concerned, not even a 0.382 retracement on its pullback thus far. So if it does take out this high out here of 236, you are setting up one whopper of an A to B equals CD to the upside out here. Is there any real bad news? No, actually today, you know, when I say it, I'm referring to the current contract. It is trading above its TAS market profile from the weekly standpoint, $2.30. A close above that would be good, would be positive. Let me go over and switch charts here. UGAZ. Let me pull up, see if this volume will pull up for me on this UGAZ. No. You may want to take a look at the UNG as an example. Been trading longer out here. But at this stage, there we got our market profiles for the UGAZ, so that's good. If we take a look at it, you know, again, you really should trade this off of the contract. This will give me market profiles that say support is going to be at about $1.86. That happens to be the top of the daily box. That is the top of the weekly box. Nothing new is out here. So the volume metrics, so the swing point of a potential A to B equals CD to the upside is December 29th. 63 million shares. Today you're coming into it much lighter. But volume on, you know, last week, this week, it's just going to do nothing more than get you really all messed up for the most part. So hope that helps you out, John, in your trade out there. When I say volume, that's mostly because of that cool rate, those new TV ads out there for it's a DirecTV or what have you. You know, put a schma in front of everything out there. And what's the gal say? What's the alcohol? In any event, I can't remember off the top of my head, but let's take a look at really what it is. So those of you that actually are here on New Year's Eve, I'm going to share with you the reasons why, and I'm going to help improve your trading out there. Why I contend what I do with regard to the ETF structures. So let's take a look at it like this. First, I want to take a look at the Qs, all right? And you know, we really do want to look at the Qs because it is the NDX 100 that has been the strong dog this year out here. So let's go see what's going on with regard to the strong dog. Let's go take a look at these market profiles and turn them off. All right. And as an example, the swing point that we've got, the most current swing point that we have out here is December 2nd. That swing point has volume of 22 million shares, 22.3 million shares. Now, the first time that we came up into that level, or the most recent time, December 17th, the market was pushing higher into that swing point. The low of that swing point, which is 114.28. Again, volume there, 22 million shares. You pushed up into it with volume of 45 million shares. Even though you rejected it, said you'd be back up there. Well, guess what? We were back up there on December 29th with 27 million shares, more volume. Says we should be back up there again. Volume. When we come back, we're going to take a look at a really cool set of tools that you can use in your trading and investing when it comes to volume. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 74. S&P is down about 7 points. We're going to go out to Philadelphia to our man John, otherwise known as Z or Zorro in our Tigers Den out there. John, Happy New Year to you. Thanks for calling. How you doing today?
Otherwise known as, yes. Steve, Happy New Year to you. Thanks for all the service you provided us this year. Appreciate that.
My pleasure. You're welcome.
Steve,
you want to take a look at the NDX. Go ahead. Tell me what you're...
Yes, you were just mentioning, you closed off the last segment with your thoughts on the QQQ.
Yes.
On the daily chart. And, Steve, I wanted to present an observation and ask your opinion or your speculation. I observe, and I shared in the Tiger's Den for your audience, if they like, the quarterly charts going back into the 90s of the two indices, the composite NASDAQ
yes.
and the NASDAQ 100. And I observe, of course, that the composite tested and briefly exceeded the 2000 spike high and is now trading just slightly under.
Yes.
And the NDX 100 came close, very close, not yet exceeded, but very close. And I also observed the NDX 100, driven by the strength of Facebook, Google, Amazon, Netflix, etc., had made a new high for this move back on December 3rd, then fell, and then has rallied since, I think, the 14th of December in what appears to be a clean ABCD rally pattern that has held underneath the high of December 3rd. Question for you, with all those observations, is this high that occurred on Tuesday, is this a candidate for a more important top, a candidate for a secondary lower high here on December 29th, leading into weakness next year?
It absolutely is a candidate for that. And the reason that so let's take a look at the reasons why it could be, and then maybe a couple of reasons why maybe it won't be. But one of the reasons why I say that it could be is simply because of the pattern, one of the patterns that you and I like to trade, which is that seventh wave move. And in this case here, the high on December 2nd is what I consider to be the most important high for the NDX 100 because it was a seventh wave move to the upside. And that high out there is 47.3975. Not only did it make that high a slightly higher high than the one from back on November the 4th, but it was doing it with less relative strength out there. So those are patterns that are typically associated with tops. They've been associated with all the major tops inside of the market. One of these two patterns has been associated with that. So until that high gets taken out, one could conclude what you just did is that whether it was the top here from the high from Tuesday or the high from December 2nd, either one of those, would be December 2nd, obviously, that one could argue would be the high. I will also share, now this is going to be going backwards, a little bit reverse order, John, than what I had intended on sharing with folks with regard to volume, but I'm going to show you a Stevie oscillator out here with regard to volume. Don't pay attention to the heading that may be on some of these charts here. It's just I needed to fill a database so I could actually kind of prove a point. Now, this chart that we're looking at for the NDX 100, top portion is the NDX, actual bar chart. The center portion here is a special oscillator that I created that takes a look at up and down volume out here. Smooths things out just a tad. The bottom is the actual advanced decline line for the NDX 100. And what I want to show people out here that from a volume standpoint, as volume is going up volume exceeding down volume as a way to take a look at it. Typically, the market's going up, and then just the opposite to the downside. So whereas I say volume schmolume when we take a look at daily. There is more meaning, in my opinion, when we take a look at what's really going on underneath the covers with regard to up and down volume. Now, the reason that I say that specifically, and I'll come back to this, is because what I had identified a year ago was the following. And that is that when we specifically take a look at the Qs, this is a graph here of the ETF, the QQQ, and the outstanding shares by day. And what we can see is that really since about the early part of 2014, so nearly 2 years now, we've seen the outstanding shares by day inside the Qs move to the downside. So one of my conclusions there, John, is that if we're going to benchmark volume that's in place today versus the way that it was in 2013 and 11 and 12 out there, we're not really comparing apples to apples out there. Mm-hmm. Instead, I wanted to take a look at apples to apples with regard to up and down volume inside of the market. I wanted to take a look at advanced decline because oftentimes you don't see, unlike when in the New York Stock Exchange, where you see maybe a divergence with price moving higher, but the advanced decline line not doing that. You don't see that very often inside of the QQQ or the NDX 100. But there are times when we see it. If we're back right now at 2000 and the 2000 high, and at the 2000 high, we saw just for a short period of time, we saw where the advanced decline line went lower, and we can see that price inside the NDX 100, that last gasp up into the high in 2000, we see a divergence there. We don't see a divergence there with regard to volume. That's why it is helpful to really have both of these indicators up on the screen. Typically, it's the volume one I've experienced, and the up-down volume, this little oscillator that I've created here, that really gives us the signal. And to show people a little bit more on that, and I hope it's okay that I'm so long-winded here, but
no, please, thank you.
Your question kind of really segues into this anyways. I don't know, life happens for you. So thanks for the call and even asking about it. But here, when the NDX 100 made a nice bottom back in 2002, what we can see, and that bottom really began, that formation of the bottom, it takes a while to form bottoms, as it does tops. The formation began in August of 2002. And price in the NDX 100 went lower into October 9th. So it was a 2-month process out there for that very significant bottom. And if we were just to focus on the advanced decline oscillator, which is the bottom portion of my chart, which is what many people focus on, versus really focusing on the volume, where it does have metrics that really are important to us, what we can see here is that we were making a lower high with regard to the up-down volume Stevie oscillator out here. So that, and it really is the volume picture that here really helps us to understand what's going on with the cues. And I'm eventually going to get there for you. But it's important, I think, for our listening audience, John, to also see more examples than just one. And back when the market was making a high out here back in 2004, made a high as well as a low. But when it was making a high, we can see that the volume oscillator was not confirming the price movement to the upside. Yet if we were looking at just the advanced decline line, it actually was confirming that move higher out here. Now, this oscillator, this volume aspect, what you can see is it can take long times to form out here. And that's why you and I have to use other tools, whether it's, as you mentioned, an A to B equals CD pattern, which could turn into a butterfly or a Gartley or maybe a seventh wave or some other type of pattern out there that we use to help us get into a trade. We can see the same thing as the bottom was forming in August of 2004. We saw that nice little volume oscillator here that I've created that was making a higher low that was really helping to really call that bottom. Okay, so that's, and there, I've got plenty of examples. We can go to 2007 top out here, which is where we're at the 2006 top right now. But what I want to do is fast forward to where we're at today. Now, when we made that real big shift to the downside here in August, we can see that inside the NDX 100, it was making higher highs. But if we take a look at that center panel out here and we look at the up-down volume, what we can see here is it was making lower highs and lower lows out there. Now, this was in concert with the advanced decline line, which eventually, came into making lower highs as well. That started to begin back in May 22nd out here. And so this was certainly, it was the Asian contagion and everything else, but there were problems before the Asian contagion with regard to the NDX 100 that were already present. It really was just a matter of timing. Inside the NDX 100 happened to be the island reversal top that formed here right around July 20th and the 21st. Okay, so where are we today? This oscillator is updated through today's Thursday through Tuesday's data. And what we can see is that the NDX 100, as you pointed out, basically has made it back up towards its highs. Actually, we know that it tested the bottom of the swing point from the trading session here of December 2nd. But look at this price oscillator out here. Look at how it continues to just simply really move to the downside. So that is my slow way of really getting back to answering your question that, yeah, the high from a couple of days ago could really be a significant high out here, or we could be anticipating a move to the downside. So what's the opposite side of all this? What is it that we've missed if we were just going to rely upon this? And I would say that it might be this, John. Right now, we are still trading inside of on a daily basis, the chart that I'm showing on my screen out here, we are still trading with inside the daily candle that made the actual all-time high inside the NDX 100. The bottom of that daily candle is 4608.92. We're trading at 4627.59. If we were trading below that week, what I would say is we have one of those automatic rejections of a swing point, at least on price. Volume, there's no reason for me to go back and try to figure out that metric out here. And as long as we trade inside a swing point, it's not, we don't have a compelling or convincing piece of information that says that we can't go back to at least maybe go ahead and finally test the highs out there, in the price range of at the 48.16 level. So
Sure,
that's and I'll throw one other piece of information because the market's been moving sideways in a consolidation. If in fact the Nasdaq is going to really, if that high from Tuesday is important, we're going to finally see a break of the consolidation that then ought to take us back towards the 41.55-ish type area out there. So that's what my eyes are seeing. What are your eyes seeing that is different? Or
yeah,
that you can add?
Steve. You outlined, I think, very well both the case for continuation of the rally to making higher highs, as well as the factors to consider that might support the market topping right here, and of course. Only time in January, February, March will give us the answer to that question.
One of the wild cards. Go ahead.
I'll just close by sharing the following idea that just over my 30-plus years of trading, I have come to always respect any market that has made a decisive peak, declined, and come back and tested a prior peak without having decisively exceeded it. Very many times I've witnessed that sort of pattern give way to, essentially a double top formation sort of thing. So from my way of thinking, the low-risk trade is a short against that Tuesday high on the NDX. And clearly, if it goes up to make new highs, well, that's just proof that the bull trend's still in force.
Yeah, inside of the market, on the bullish side, look, it takes a while typically to form a bottom as it does a top out there. What I'll also say is the preponderance of people that I speak to seem to be looking for the normal January move to the downside. So it helps to fit into the scenario that high from a couple days ago, may have been it. I'll say as we enter into 2016 that, quite frankly, in January, there's close to it's between 60 and 70%, we'll call it 65%, chance that January is actually a move higher, different than your typical Januaries out there. So, and I know there's enough statistical information to back that up. I wouldn't say it. I would never say it if I didn't, if I didn't actually do the work myself out there. So, continuing to trade into that same swing point from the high back in 2000, I think it's really helpful to see it break through there. The other chart where we took a look at the up and down volume out there says there's a problem that is brewing. The question, what you and I are trying to do, is just figure out, when is that? What is the time on that?
Indeed.
That's really the key out there. So I think that our best signal with regard to what takes place in the overall market does come from the Nasdaq Composite and the NDX 100, because those have been the strong hands out there. If they can keep up that strength, the market probably continues to move higher for a bit.
Very good. Steve-O, thanks for that really thorough review. Enjoy that 3-day weekend. We'll look forward to speaking to you next year.
Same to you. Be safe out there. That was John in Philly, and that was perfect. It fit into being able to take a look at what I wanted to discuss with you guys anyway. So, another element here, you still have the price oscillates, the blue line on my screen out here that's above the zero line, and it's not really falling. Right now, it's just flatlined out there. If the markets were going to be headed lower, that would be pointed in the downward direction and or try to get below zero. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks, to the last trading session here in 2015. Boy, time does fly. So, be safe out there. Use Uber if you're drinking and driving, or get a designated driver, something along those lines. Thank you, Z, for that call out there. One of the other things that I can do that I'll share with you with regard to volume analytics inside the Qs or the NDX 100. Here is So the point that I want to make, and you go back and do the work yourself, but my interpretation of what goes on with regard to volume inside of the index ETFs is it just simply does not provide us with an accurate picture of what's really going on inside the markets. With regard to trading signals, it used to work great. I have not seen where it has worked well at all. What I do like to take a look at, now I do know one thing. We see those big high volume days to the downside inside the QQQ series ETF, it sets bottoms. Until that pattern starts to fail, which it has not for years, you've got to take a look at those as being bottoming patterns out there. If we do take a look at up and down volume out here, I've really got two different metrics that this screen here shows. So again, the top portion is the NDX 100. The center portion here is the daily advancing issues, less declining issues. And you can see I've got a zero line. That's the blue horizontal line going across my screen. Now, John Logan, I love one of the metaphors or analogies that he uses with regard to the market profiles is helping you to eliminate one side of the trade. In essence, if you just simply use the up-down volume oscillator inside of the QQQ series, you could really do the same. Now, the bottom portion is just simply the center portion just smoothed out over a 10-day period of time, just to get rid of a little bit of the jockeying back and forth above the zero line out here. In essence, the way that you would use it is when this volume indicator is above zero, that's telling you to not be short. Maybe you don't want to be long, but it is certainly telling you to not be short out here. Likewise, when you get below that level, it's telling you not to be long. Now, this is actually pretty cool because what we've been in here is a lot of sideways chop. So this is giving you kind of the higher risk side of the market for you to be on, or the lower risk side of the market, I should say, for you to be on, and the higher risk side for you to not be on out there. And it works like it works really well. Take a look at that move to the downside, that little Asian contagion as an example. You've got your signal here on the bottom portion of my screen, as well as the center portion out there, where you would not have gotten that message here inside of the QQQ series ETF with regard to volumes out there. But here, in the way that we would use it, both of those would have said, hey, do not be on the long side of that trade at that stage. Be neutral or be in short position. And that was well before we had that 3-day fall out there. And this has stood the test of time. Take a look at back here in October of 2014. Maybe you didn't catch the bottom. That was during the Ebola scare, right? But here on the trading day of October 24th, that gave you a clear signal. Do not be on the short side. Be on the long side. That was after price was, in essence, getting back to its previous highs inside of the Qs out there. So that would have given you the long signal. Your short signal would have come if you stayed all the way until you got the short signal right here. Looks like till December the 10th out there. So it's another great way of being able to find tools and systems in order to be, take a look at right back here. This is back in April of 2014, where you get the signal to be, which side of the trade should you be on, which side should you not be on. This says be on the long side of that trade. That signal lasted all the way until you get to the trading day of July 10th out there. So, folks, I hope that's a good way to wrap up 2015. Stay tuned. There's going to be a replay during the next hour, and then we've got the Tom O'Brien Show from 3 to 5. I believe Andy Eck to go ahead and close it on out for 2015. Be safe. Have a happy New Year, and I look forward to seeing you on Monday in 2016. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.